Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, where news governments in Hong Kong and Singapore continue to add taxes and restrictions to press back on fast rising house prices. But in a bit of a first, there is nothing new out of the United States today that might impact the New Zealand economy. In Canada, though, inflation is on the rise there. It was up to 2.5% in June, a jump from 2.2% in May, and higher than analysts were expecting. The June increase was the highest in 6 years. The Canadian currency rose on the news because of expectations of interest rate hikes. In an interesting twist, the regulator-induced push to have Australia's regulated banks reduce their exposure to multi-unit housing projects, the gap has been quickly filled by shadow banks and especially foreign financing. The effect has been to increase foreign debt and its systemic financial risks. That is because the funding is now essentially from unregulated non-ADIs. This is surely the start of unintended consequences from aggressive regulator actions reacting to publicity from their Royal Commission and who want to be seen as doing something. In Singapore, they're adding taxes to control runaway house price rises. Locals were slapped with a 5% rise in stamp duty, taking the rates to 12% for a second property and 15% for a third or more. For foreigners, those rates are now 15% and 20%. In addition, their maximum LVR has been reduced to 75%. In Hong Kong, they're also clamping down with a new vacancy tax adding to similar restrictions as Singapore, with a 15% stamp duty on all non-first home purchases. In China, we should keep an eye on reports out of Beijing that President Xi may be under some internal pressure over how he's handling the US-China trade spat. Nothing there is transparent, so the tea leaves need to be read carefully. But that they are surfacing in the first place is interesting. And speaking of Chinese transparency, in a new report out, says that they are making significant progress with their biggest problem, pollution. But despite the size and speed of the gains, it may not be enough, the report concludes. US Treasury 10-year yield jumped at the New York market close to almost 2.9%, up 5 basis points. Markets are expecting inflation to rise faster over US policy missteps. The Chinese 10-year is at 3.51%, that's up 4 basis points, while the New Zealand equivalent is now at 2.82, that's down 1 basis point after its chunky rise at the end of last week. And keep an eye out for news of an international bond liquidity slump, which is starting to affect the biggest financial market of all. And gold has jumped. It's up $7 at the end of trading last week and is now just over $1,232 an ounce in New York. Although not new, we should also note that industry observers caution that we're running out of gold and major supply additions may not continue. When markets catch up with that, that may bring a supply price shock. And copper has fallen below $6,000 in another slip. US oil prices are firmer, now over $68 a barrel, while the Brent benchmark is now just over $73 a barrel. The US rig count has fallen by 8 this week, although it is up more than 100 in the past year. And the Kiwi dollar ended last week sharply higher at 68.2 US cents, a gain of more than 0.75% after some Trump musings. On the cross rates, however, were a little changed at 91.8 Aussie cents and 58.1 euro cents. That puts the TWI at 71.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.